back. We've covered legal and healthcare areas. Now, are you invested to benefit from AI? Joining us from Kansas City, we've got financial advisor Jonathon McCoy. Jonathon, good to see you.
How's it going, Matt? Good to be seen.
Well, need you back here in the studio, but we've been busy. So, want to
Yeah.
want to pose this question here to you: Are retirees actually exposed to AI?
Well, I think based on our first few segments, the exposure is sort of inherent in our lives, but I think what you're referring to is more on the portfolio and investing side, right? Where is our money positioned? What are those risk and volatility exposures across these different sectors? And really, AI is I would say slowly but surely, but very quickly gaining steam across a lot of sectors. Companies even like ourselves, and you look at the energy sector, industrials, all these companies, no matter what sector of the market and economics you're looking at, are using AI to generate better profits, more efficient processes, whatever that looks like. But as a retirement investor, we have to be thinking about the broad effect on the overall markets and our portfolios. And as financial advisors, we're looking at, well, how is AI seeping into the actual money movements of the market? How much risk is that exposing people to, on top of the risk of people maybe making a quick-footed decision or move in their portfolio, like you mentioned in the first segment around using AI to actually choose your specific investments. We've got to take a very disciplined approach about how we're mitigating those risks across the portfolio while also not completely ignoring the growth potential that there is in what AI can do to generate, these, potentially significant gains and growth possibilities across a wide variety of portfolio investment sectors. If we're thinking about things like the S&P 500 or the Dow or the Nasdaq, AI is having an effect in all those areas.
So exposure isn't just tech stocks. It could be across multiple sectors, and that's what you're getting at. But boom versus bubble position. So should someone chase? Maybe is it too late to get into this? I mean, or is it has the boom already happened and gone? Are we now looking at the bust? Well, tell me what's going on here.
Well, it's interesting. I was just taking a peek back at the late '90s when we saw what happened with the Nasdaq and tech stocks in particular. And no, it's not just tech stocks, as I described. It's a broad area of the world's economics and global market activities being affected by AI. But you see what happens when specific sectors like tech may balloon out and that bubble pops, and tech itself may become very volatile. We don't know if there's going to be, if anybody knew the future over the next 6 to 10 years, and we'd all be doing probably something different than we are today, especially in regards to the stock market. But when we look at the late '90s, before we saw the early 2000s dot-com bubble burst, the Nasdaq was down 80%. That's a heavily tech index, tech stock index. We look at the growth that's been generated by AI specific companies, these microchip manufacturers, and sort of what the companies that we think of as leading edge, that we're hearing about and seeing 10, 20 times a day in the headlines. What are these two or three or four companies specifically doing? That's oftentimes where we most frequently see these quote unquote bubbles, while underneath that bubbling surface is all of these other areas of the market that AI is impacting that we can also be investing in. So there are ways that we're discovering people can remain diversified while not just being, completely left in the dust of what this AI revolution is going to do to our portfolios.
So you got to balance it right? I mean, you got to think about risk management for retirees. They probably can't afford another dot-com bubble. They probably can't afford another 2007, 2008. You need to balance some growth opportunity with the sequence of returns risk, correct?
Yeah, exactly. And you talk about people trying to use tools like AI to pick positions in their portfolio. You don't know how far down the road you're getting in terms of a self-fulfilling prophecy, right? Not that I'm a huge conspiracy theorist here, but like Gerald mentioned, AI is only going to be as good as what you put into it. And the information that you're feeding, what are your income needs? What's your social security benefit going to be? What is your overhead? When are you expecting some of these big out-of-pocket expenses like, that dream European river cruise? Whatever you've come up with, is your portfolio built to sustain your lifestyle first and then build everything else around that? And that's ultimately what we do with Market Advisory Group is we look at the tax impacts, all these different areas that we talk about it from a team approach. That AI, if you're just simply asking where should I invest to try to profit from AI investments, you might only be seeing, you mentioned AI can get you 80% of the way there. The other 20% is where the disasters live. Well, I'm concerned that people may only see 2% of what they need to see, and the other 98% they are just completely oblivious to because they're not asking, they don't have the information to be able to ask the right questions. So, yeah, diversification is absolutely important, but we've got to be building portfolios around our lifestyle needs.
So very quick, yes or no answer. Do you see a lot of other people saying that their advisors are asking them about AI?
No, it's quite frankly the other way around. People asking their advisors,
Yeah.
and
Yeah.
we'll wait and see, right?